Why, hello, everyone. Ashanti Titus here, Profit Mode Financial Services. I hope that you are having an amazing day. Today, I wanted to talk about the foundation of accounting and also as the foundation as it pertains to QuickBooks. If you don't have a grasp on the basics or the foundation, then it can be very difficult in the future to understand what's going on, or it could be confusing, okay? So one of the things I wanted to talk about is this is accounting 101, entrepreneurship. A lot of people are intimidated by accounting software or QuickBooks and what have you, and I want to just pretty much shed some light on things so that you are not intimidated by it and just break it down in simple terms, okay? So first and foremost, one of the things that's off the bat that's confusing when I was in my accounting class in high school that we had to get very, very clear is that what the bank says on the bank statement is reversed for the accounting system. So what do I mean by that? So normally, a lot of you look at your bank account, you have experience looking at your bank statement, you see that all of the decreases are called debits, okay? So on your bank statements, like anytime that there's a payment to, your light bill, your water bill, your credit card bill, it's considered a debit. Debit. And then when you get a direct deposit from your job or if you get a deposit from a customer, it's going to say credit. Now, what makes it confusing for a lot of people is that with accounting, there's something called a natural balance with each and every account. The cash account has a natural balance of a debit balance. What does that mean? So a natural balance is pretty much which one does it take to increase the account, to make the account more. So for cash accounts, the natural balance is a debit. So the part that's going to make it increase is actually a debit. So see how that can be confusing? So on your bank statement, it's showing a withdrawal as a debit. However, in the accounting world, a debit actually increases your cash account. So that off the bat is confusing in itself. And a credit in the accounting world to your cash account is a reduction in your cash, okay? So even though your statement says, okay, you have a credit for $1,000. Well, a credit for $1,000 is an increase in your money on your bank statement. However, in the accounting world, when you credit the cash account, you are actually reducing the cash account. So let's do a run at this. Let's go ahead and take a look at it. I know some people are visual, so for my audible learners, hopefully I was clear in explaining that to you. So let's go ahead and do an example. So I'm over here on my little Google Sheets, and I learned the old school way accounting. Number one, the main driver in QuickBooks is going to be your cash account or either your credit card. And for a lot of newbies to business, you're not going to have a credit card, or you may not have a credit card just yet. So we're going to focus on cash today. So with that being said, I'm going to repeat this again. The natural balance of the cash account is a debit. The natural balance means that this is what increases the account. So it's going to plus the account. Credits are going to reduce or minus or subtract the account. So the natural balance of a cash account is a debit. And I tell everybody I'm good at math. I need spell check in English because everybody has their weaknesses, and I'm well aware of mine, and I am not ashamed of it. So if you see something misspelled, hey, you may want to find somebody that spells right all the time, because English is my favorite subject. But anyway, so the normal or the natural balance of cash is going to be a debit. So whenever you see a credit to the cash account, it's going to be reducing it, okay? So let's say we have so everything that's coming through QuickBooks is coming through the cash account when you have no credit card, right? So when you're inside of there, you're going to see all of these different transactions. And what's happening is that QuickBooks automatically books the cash side whenever, if it's based off of if it's a deduction or if it's a deposit. So whenever there's a deposit inside of QuickBooks, QuickBooks is automatically going to debit the cash account. So I'm going to emulate a journal entry. And with a journal entry, there's a debit side and there's a credit side. So I'm going to put DR and CR. You must hit 2 accounts whenever you make a journal entry. So whenever these items are coming through QuickBooks, QuickBooks is taking care of the cash side, okay? So let me show you that. So when I say it's taking care of the cash side, if it's a deduction, it's going to be crediting it. So let's say you had a $1,000 bill that came through. You had a $1,000 bill. This is what QuickBooks is doing in the background. It is actually going to credit your cash account. And your job, or the accountant's job, is to categorize that transaction and put it in the proper account. So let's say, oh, okay, I see that came through. That was PJ's marketing. So I'm going to go ahead and I'm going to categorize the transaction that came through. All right. And so the natural balance of the cash account has been reduced by $1,000 because the natural balance is a debit. However, we want to reduce it because we paid our marketing bill. So marketing is actually debited, and then you're going to credit the cash, which QuickBooks has credited the cash for you, right? So you're going to have to pick out the debit side. So this is when there is a withdrawal from cash, QuickBooks credits the cash. When there is a deposit into cash, QuickBooks will debit the cash account. So keep that in mind. So when there's a deposit, so that's the example of paying a marketing bill. All right. So that's what the journal entry will look like. Now, let's say we got a payment from a customer. All right. So we got a payment from a customer, and I'm going to go ahead and set this back up to make it very clear. Payment from customer. So if we're going to get a payment from a customer, what is QuickBooks going to do in the background? QuickBooks is actually going to debit the cash account for the amounts in which the customer paid. So let's just pretend it's $2,000 that the customer paid. What we're going to do, we're going to categorize the income, and that is going to be, we're going to increase the income account, which is going to be $2,000 as well. That is what the journal entry looks like inside of QuickBooks. So QuickBooks is automatically handling the cash side for you. What you're doing is you're doing the other side of that journal entry. So if you, never had an accounting class or anything like that, I want you to understand that whenever you're categorizing things, you're actually creating the other side of a journal entry. Journal entries are being created as you categorize. You're literally telling the software the other side of the journal entry. Now, there's AI technology and things like that that tries to make guesses on what the category is. And sometimes some people can get lazy and, lean on that AI technology. And that's not necessarily a good idea when you're first starting out with transactions in business because, if you can get, complacent in that, and a lot of items can get miscategorized into the wrong expense accounts, causing, all sorts of problems. But the important thing that I want you to grasp from this video is that just because it says a credit on your bank statement and you have a deposit, do not do that inside of QuickBooks because you're going to have an absolute mess and an absolute nightmare. The accounting world is the opposite. So it's the opposite of your bank account. And that's due to the fact that when the banks take in your money, It's a liability to them because it's not your money. Okay? So that is why it shows up as debits and credits on your side. On your side. When you see the statement, it shows up as debits and credits because they're liable for your money. So it's flipped. Okay? The cash account is an asset account to you. The cash account is an asset account to you. All the asset accounts, except for the contras, which is a whole nother level, but we'll talk about. All of the asset accounts are debits are increased by debits. Their natural balance is a debit. If you have $100 in your cash account and you need to make a journal entry, you are going to debit that account by whatever amount that needs to be added to that. That's how you're going to increase it. If you need to decrease it, you're going to credit your cash account if you're having to go back and do journal entries or things like that. Or sometimes with QuickBooks, I've experienced sometimes there's days where things don't sync. So you have to go back and do journal entries. And so when you're trying to clean up a mess or when you're trying to add transactions that did not process through or did not come through, then keep in mind to increase the cash account, the natural balance is a debit. To decrease it is a credit. Okay? So it's very, very important. So it's flipped. So from your statement to QuickBooks, it's two different worlds because it's coming from a bank in which they're liable for your money. So your money is a liability to them. But for you, it's an asset to you. So on your books, it's going to show as an asset. So it needs to be, journaled appropriately. All right. Hopefully this video was helpful to you. If you need any assistance, consultations, we definitely help new business owners navigate this whole, new part of your journey. So that's something that we are very excited about. Definitely reach out and we can set up a consultations. We have 30-minute consultations starting at $65, $120 for an hour. If it's something that needs to be done over the course of weeks, we can definitely set something up for you for that. If you need bookkeeping, if you don't want to deal with any of that and you just want to hand it all over to someone else and, get your bookkeeping done each and every month, we can also assist you as well with rates starting at $200 per month. All right. Until next time, stay profitable and stay great. And I'll talk to you soon. Bye.